Welcome to the News El Salvador SV podcast. Welcome to the Noticias El Salvador SV podcast, a space for conversation and reflection, where we jointly explore current affairs from El Salvador and the world. Your donations to the project are accepted via PayPal and Bitcoin QR. Find US on your favorite platform. Search for us as News El Salvador SV. And now you can also look for our sister podcast, Documentaries of El Salvador, where you will find cases and stories that you will surely find interesting. Remember to follow, share, and comment. If you wish to do business with us, the email address is available. And greetings to all the wonderful people who listen to us. Today, we have a really critical mission. We're going to try and cut through an incredible amount of noise to distill the most important financial warnings we're seeing from global markets.
And not just the warnings, but also the major geopolitical chess moves that are affecting, well, entire economies.
Exactly. And then we'll bring it all home, examining how these powerful international forces intersect with, the very distinct and developing economic landscape of El Salvador.
It's a crucial snapshot. I think you have to see it that way. It's a world facing some very high risks, but also, for some, rapidly shifting regional opportunities.
So to really understand any momentum we're seeing in Central America, we have to start with the global picture.
You have to. You must first establish the, let's say, shaky ground of the global economy. Wall Street is flashing some serious warnings, particularly in these highly leveraged sectors. I'm thinking crypto, I'm thinking technology.
And these ripples, they don't just stop at the border, do they?
No, absolutely not. They fundamentally alter the risk appetite for investment globally. So we really have to analyze that international context first before we can accurately frame what's happening on a national level.
Okay, so let's unpack that financial volatility. Where should we start?
Let's start with the crypto sphere. It's a perfect example. The global cryptocurrency market experienced a severe rapid correction just recently.
We're talking about an astonishing loss here, right? Approximately $1.2 billion in combined capitalization.
Over just 6 weeks. That's the critical part, that speed. It represents a massive 25% drop from its peak back in October of 2025.
A drop of that scale suggests it's something deeper than, just simple profit-taking. What was really driving this sharp retreat?
Well, what's fascinating here, and I think what makes this correction particularly alarming, is that the primary factors weren't some technical failure of the blockchain or a hack.
Yeah.
No, they were direct consequences of macroeconomics and market structure. The first major headwind is the pervasive uncertainty surrounding the Federal Reserve of the United States.
Their future interest rate decisions.
That's the core thesis, isn't it? The higher the potential for interest rates, the less appealing these risky assets become.
The basic calculation.
Precisely. When the cost of borrowing goes up, investors are simply less inclined to chase volatile growth assets like crypto. They shift their capital toward low-risk alternatives.
Primarily United States Treasury bonds.
The safest harbor. So this fundamental risk-reward calculation just creates immense downward pressure. Then the second factor is what you could call the tech spillover.
Explain that.
Cryptocurrency valuations, they often correlate very strongly with high-growth tech stocks. So as anxiety began to rise over the let's say, frothy valuations of some large tech companies, that nervousness naturally cascaded right into the crypto markets.
But the truly destructive element, the one that really turned a simple correction into a full-blown cascade, was the excess of leverage. Can you just walk us through the mechanics of that? How did the leverage crisis amplify the loss so disproportionately?
Okay, so leverage simply means investors are using borrowed money. Often, they're borrowing large multiples of their own initial capital just to take positions. They're playing on margin.
So the potential upside is huge.
The upside is huge, but so is the downside. When prices move favorably, it amplifies your profits dramatically. However, when prices fall, the broker or the exchange issues a margin call, demanding more capital.
And if you can't provide it?
If the investor cannot meet that call, their position is automatically liquidated. It's not a choice. This forced selling, often executed incredibly rapidly, floods the market with supply, which then amplifies the downward price movement exponentially.
A domino effect.
A perfect domino effect. That $1.2 billion loss was disproportionately accelerated by these mechanical forced liquidations. It just goes to show, while crypto may be decentralized in theory, it's highly centralized when it comes to leveraged risk.
This is where the story gets highly contentious, though. we shift from these technical market mechanics to some very serious claims about the structural integrity of the market itself.
You're talking about Jim Cramer.
Jim Cramer, yes. A prominent and, let's say, often provocative market commentator. He's leveled an accusation of outright manipulation. He claims a powerful cabal may be actively intervening to manipulate Bitcoin's price,
Specifically to keep it above that psychological threshold of $90,000. Cramer's position is, I think, critical here because he separates the underlying asset, Bitcoin itself, which he generally views positively, from the derivative products that surround it.
the futures, the options.
Right. He argues that those instruments, futures and options, are primarily vehicles for speculation and, more importantly, for manipulation. His theory is that if powerful actors are propping up the price, they're doing it to protect their own massive, over-leveraged institutional positions.
Positions that would be completely wiped out in a true crash below that $90,000 mark.
They'd be gone. The insight here is crucial. If the market is being artificially sustained by a few very large players to prevent widespread panic selling, then the volatility is being suppressed, but the underlying structural risk remains. Well, it remains absolutely toxic.
So any institutional investor who relies on organic price discovery is essentially being misled.
It raises a profound question, doesn't it? A question about governance in this largely unregulated crypto derivative space. If powerful entities can artificially sustain a key price level, it introduces a structural risk where a sudden shift in their strategy could trigger a non-technical catastrophic collapse.
It challenges the very idea of a free-floating market.
Completely.
Yet we have to acknowledge the critical counterframing here. Dave Weisberger, he's the co-founder of CoinRoads, he strongly dismisses Cramer's theory, calls it a conspiracy.
He does. Weisberger argues this is just normal market behavior. He suggests that this selling pressure is merely the standard, intense volatility of a high-risk asset class.
So what are his explanations?
He posits two more probable ones. First, either early investors, the ones the community often calls whales, are just distributing profits after massive multi-year gains. You can't blame them.
Cashing out.
Or his second theory is that new institutional investors are simply reaching a point of understanding, or perhaps profit-taking, within their own long-term Bitcoin investment thesis. For him, looking for a secret cabal just distracts from the inherent high-risk nature and the, predictable profit cycles of the asset.
And of course, we can't overlook the irony in all of this. The Cramer inverse phenomenon.
Oh, yes.
Social media traders who frequently adopt a strategy that is the complete opposite of Cramer's advice.
It's an astonishing situation where market commentary itself becomes a direct input for trading decisions. It just underscores how much modern financial markets are driven by personality and media celebrity, not just pure fundamentals. It's a key takeaway for anyone investing today.
Okay, let's shift focus a bit, moving to traditional and, next generation technology. The caution signs continue there as well.
They do. The artificial intelligence industry, which has seen just unprecedented levels of investment, is now facing critical scrutiny regarding its valuation. JP Morgan recently issued a highly cautionary note about the soaring prices of AI-related stocks.
The core issue they're flagging is that gap between expectation and realization, right? The classic bubble risk.
That's it, exactly. The warning suggests that current AI stock values, especially those tied to hardware and software infrastructure, might be unjustifiably high if the expected productivity gains don't materialize.
At a pace that matches the investment.
At a pace that matches the significant capital investment and the immense expectations placed on these companies.
That's a very subtle but vital distinction. It's not necessarily that the technology won't work, but that the returns might take 5, maybe 10 years, yet the stock prices are acting as if those massive profits are guaranteed next quarter.
Exactly. Well said. Investors are pricing in the full, unmitigated success of AI transformation today. If corporate adoption is slower than anticipated, or if the productivity increase is marginal in the short term, those valuations will be exposed as pure speculation.
And this global investment frenzy is highly relevant regionally. We noted that El Salvador, for instance, just acquired NVIDIA B300 chips. They're the first country in the region to do so. For context, what exactly is the B300 chip class? What does this acquisition signify?
The NVIDIA B300 chips are they're high-performance graphic processing units, or GPUs. They're specifically designed for training the most complex AI models, like the large language models that are the technology behind services like ChatGPT.
So this is the foundational hardware.
This is the fundamental, costly infrastructure you need for true national AI development. El Salvador's acquisition signifies a serious strategic bet on leveraging high-performance computing to, leapfrog ahead in national digital infrastructure.
But the warning still applies.
Oh, absolutely. The JP Morgan warning remains pertinent. Every nation making this kind of investment has to ensure the productivity gains can justify the massive hardware expenditure.
Meanwhile, speaking of massive speculative valuations, ByteDance, the parent company of TikTok, just saw an unprecedented spike in its private market valuation.
It's incredible. A Chinese investment firm, Capital Today, purchased a block of shares that valued the entire company at an astonishing $480 billion.
And what was the previous valuation?
Well, to put that into perspective, the previous implied valuation for that same share block was closer to $360 billion. So this is an aggressive $120 billion jump in implied valuation.
It reflects an exceptionally strong investor appetite.
Almost irrational. Capital Today reportedly fought off several major global competitors to secure that stake.
So what are the deep implications of valuing ByteDance at nearly $500 billion, especially given the persistent and very real regulatory and political risks associated with the company's global reach?
Particularly in the United States and Europe.
Right.
It implies that investors, especially major venture capital, are willing to price in maximum future growth and deliberately disregard the immediate geopolitical headwinds.
They're just ignoring the risks.
They are. Despite the constant threat of regulatory action, forced divestiture, or even outright bans in key Western markets, the market perceives TikTok's global user base, its sheer cultural penetration and data collection capabilities as an irreplaceable dominant asset. That $480 billion valuation tells us the quest for dominance in global social media and data architecture remains paramount for high-stakes capital. It even overrides significant political caution.
To finalize our global financial landscape, we need to look at broader credit health.
We do. Goldman Sachs has issued a serious warning regarding risks related to subprime loans. If these materialize in the broader markets, it could have significant ripple effects.
Okay, for our listeners, when we talk about subprime loans, we are talking about lending money to borrowers with lower credit ratings, often at higher interest rates. Why is Goldman sounding the alarm specifically right now?
It reflects concerns about tightening financial conditions combined with the potential deterioration in underwriting standards. Basically, if the economy slows, defaults on these riskier loans are going to increase.
And if that debt is packaged and spread around the financial system,
then you have a problem, similar, metaphorically at least, to what we saw leading up to the 2008 crisis. A rise in subprime defaults could trigger systemic issues far beyond just the consumer market. It could impact bank profitability and overall market stability. It's a crucial early warning signal.
We're also seeing some organizational shifts, signaling adaptation in the tech sector. Acer, a major player, announced a leadership transition for its operations in Pan America.
Right, and this signals an ongoing restructuring. Tech companies are trying to optimize their regional strategies to navigate these incredibly complex supply chains and varied market demands.
So finally, let's look at the general market atmosphere after these recent global sell-offs.
Well, you're seeing United States stock futures and Bitcoin reducing their losses, which suggests a measure of stabilization. However, the movement of smart capital tells the true story.
And what's that?
Treasury bonds are rising. This is a classic flight to safety. Investors are parking their funds in what they perceive as safe government debt.
Which indicate?
It indicates that while the panic selling may have subsided, the underlying risk aversion remains intensely high. The market is stabilizing, yes, but it is not yet confident.
That persistent global risk aversion seems perfectly justified when we transition to the geopolitical landscape. It's currently undergoing some of the most profound shifts we've seen in decades.
It really is.
Let's start with a bombshell development concerning the conflict in Ukraine. A confidential draft, a 28-point peace plan, reportedly linked to the potential next United States administration, has been leaked.
And it details massive, immediate transformations for the region. This plan is exceptionally consequential because it contains substantial points that dramatically favor Russian demands. It would completely alter the trajectory of the war.
So we have to just impartially report the details of these proposed concessions.
You must.
Okay, let's detail the military and territorial demands outlined in this framework. The most dramatic point seems to be the requirement for Ukraine to cede the entire Donbas region to Russia.
including areas currently under Ukrainian control.
Right. And furthermore, the lines of control in Kherson and Zaporozhye would be frozen based on current military positions.
And it gets more severe. The plan also mandates that the United States and other countries formally recognize Crimea and the Donbass as Russian territory.
Although Kiev itself would not be formally required to do so.
A small consolation, I suppose. But the military component is arguably even more drastic for Ukraine's long-term sovereignty. The plan mandates a significant reduction of the Ukrainian armed forces.
How significant?
Reports suggest this could be a reduction of up to 50% or even 2.5 times its current size.
That's crippling.
It is. Kiev would also be required to renounce long-range weapons and freeze its North Atlantic Treaty Organization or NATO membership aspirations for several years. In essence, this framework attempts to solidify Russian territorial gains while permanently crippling Ukraine's defensive capacity.
The process behind this, however, is mired in immense controversy.
To say the least.
The sources indicate the plan was negotiated with a close associate of Vladimir Putin, Kirill Dmitriev, and involved high-level U.S. officials.
People like Marco Rubio, Jared Kushner, and Steve Witkoff.
But critically, both President Zelensky and key European governments were largely excluded from the drafting process.
They were informed only in a very limited after-the-fact fashion, and the non-inclusion of Ukraine's leadership and its primary European allies. It's not just irregular, it's politically destabilizing.
It suggests a major shift in the United States' stance.
It does. The Wall Street Journal report emphasized this. The potential incoming administration does not consider its task to be satisfying the territorial demands of Kyiv, but rather ending the conflict swiftly.
Even if it requires imposing massive, painful concessions on the victim state.
Yes. And that sets a dangerous precedent for the reliability of U.S. alliances globally.
The geopolitical pressure is definitely multi-front. At the same time, the United States is applying intense military and covert pressure on the regime of Nicolás Maduro in Venezuela.
The intent is highly visible. It's being signaled by the positioning of the largest United States aircraft carrier in the Caribbean Sea.
A clear, decisive demonstration of force projection.
It signals intent and the capability to intervene. But what's more concerning are the details regarding approved Central Intelligence Agency, or CIA, covert measures?
Measures aimed at what?
At preparing the battlefield. These are operations designed to create internal instability and create opportunities for future action.
And what types of covert operations are we talking about in this context?
We're talking about measures that include sabotage targeting infrastructure or key military sites, as well as sophisticated cyber attacks and psychological operations.
Psychological operations?
Yes, things designed to undermine the confidence of the populace and the military in the regime's leadership. The goal is to weaken the target from within before any potential overt military action is taken.
And we know that military planners have concrete options prepared if diplomacy fails.
They do. The options include lists of potential targets, specifically focusing on facilities linked to illicit drug operations and targeting military units that are closely aligned with Maduro's inner circle.
This signifies a high level of contingency planning.
Very high. Although CIA covert actions would likely precede any overt military strikes, the material indicates the United States is ready for various levels of escalation.
Now, amidst this highly charged environment, there was a brief diplomatic opening.
There was. Nicolás Maduro reportedly offered to step down after a transition period of 2 to 3 years.
And the White House rejected this proposal.
Decisively. The United States' demand remains an immediate, or at the very least, a swift exit.
That rejection is significant.
It is. It signals that Washington is not interested in a slow, managed transition controlled or negotiated by Maduro's political apparatus. They are pushing for a sudden, decisive political break.
But this rejection also means the conflict remains at a high risk of immediate escalation.
The diplomatic middle ground was just quickly dismissed.
Concurrently, we have to note the news of a major incident in Venezuela. An explosion and a fire at the José Antonio Anzoátegui petrochemical complex.
Operated by the state oil company PDVSA. And given the intense external pressure and the confirmed CIA covert operations, the lack of an official version on the cause or the extent of the damage, well, it immediately raises significant suspicions about the origin of that incident.
Let's take a brief look at some other global narratives that provide critical context.
We're seeing Europe consolidating its space ambitions, preparing for its first autonomous moon landing, which is officially scheduled for 2030.
And that highlights a commitment to advanced technological development separate from the United States and China.
It does. We also note the 50th anniversary of Francisco Franco's death in Spain, which marked the beginning of that country's transformation toward democracy.
And this historical moment brings into focus the societal costs of dictatorship, specifically the history of the Patronato reformatories.
Awful institutions. These were dark places where women deemed single, lesbian, or rebellious were interned under ultra-conservative Catholic values. It's a painful reminder of state control over personal liberties.
And finally, global commerce and diplomacy remain highly sensitive in Asia.
Yes, Japan is actively trying to calm relations with China, following some controversial comments about Taiwan made by the Japanese Prime Minister.
And China reacted by implementing diplomatic and commercial measures in response.
It just confirms that these flashpoints in Asia remain highly volatile, capable of rapid escalation that can affect international trade and economic confidence.
Before we transition to our analysis of El Salvador's internal developments, we want to take just a brief moment to remind you of the importance of your support. This entire project is sustained exclusively by listener contributions.
That's right. So if you find this deep dive valuable, please consider making a donation through PayPal or by using our DitCrane QR code.
We also encourage you to seek out our sister podcast, Documentaries of El Salvador, where we offer in-depth explorations of national stories and cases you will find fascinating. Your support is crucial to our continuity. All right, moving from that highly turbulent international environment to El Salvador, the economic data presents a picture of significant forward momentum.
It really does. Let's begin with the hard data from the United Nations Economic Commission for Latin America and the Caribbean, or CEPAL.
What are they projecting?
CEPAL projects highly optimistic forward momentum for 2025. El Salvador's exports are anticipated to grow by a robust 10%.
And overall economic activity
Grew by 4.78%. That's a strong regional performance, and it's especially notable because the construction sector led this growth.
which indicates that major infrastructure and development projects are successfully channeling capital into the real economy.
Exactly. And the influx of foreign capital remains vital. The arrival of family remittances, that's money sent home by the diaspora, grew significantly. It reported an 18.5% increase through September.
And that substantial liquidity provides essential support for consumption and investment across the local economy.
It does. And CEPAL also provides strategic recommendations for sustained success. They see immediate potential for increased trade with the United States, specifically citing the manufacturing of t-shirts as a key growth area.
And for long-term resilience.
For sustained long-term resilience, the Commission recommends that El Salvador proactively deepen its trade relations beyond traditional partners, specifically prioritizing strategic relationships with China and the European Union.
Diversification.
That diversification strategy is absolutely essential to insulate the economy from volatility in any single major market.
Now, one remarkable local success story is the cost of energy. That's a critical input for any developing economy.
And the price of energy has fallen to its lowest level in 4 years. It reached an average of $66.27 per megawatt hour in October of 2025.
A value we haven't seen since 2021. So why is this so significant, and what factors are driving this massive reduction in operating costs?
That price, $66.27 per MWH, is highly competitive. It provides a substantial advantage for industrial operations. And this historic low is attributed to two key positive factors.
Which are?
First, abundant hydroelectric generation, meaning the country is effectively capitalizing on local water resources. And second, an increased contribution from natural gas infrastructure.
So lower energy costs directly translate into improved competitiveness.
For local businesses, yes. It attracts foreign direct investment, it reduces the burden on household expenses, it forms a solid foundation for further industrial expansion.
And on the ground, the government is intensifying efforts to strengthen local production.
We are seeing the launch of the next phase of the program for increasing production, focusing initially on essential basic grains.
And this initiative is fundamental for enhancing food security.
And reducing national reliance on volatile global commodity markets. It also directly supports local entrepreneurship, and it's imperative to highlight the foundational role of women here.
How so?
Official data shows that more than 60% of micro enterprises in El Salvador are led by women. This just underscores female leadership as a driving, stabilizing force for grassroots economic activity.
El Salvador is also continuing its aggressive pursuit of technological leadership in the region.
It is. The country made international headlines by becoming the first in Central America to acquire those high-performance NVIDIA B300 chips we mentioned earlier.
And that investment signifies a serious, calculated commitment to leveraging advanced computing.
And that strategic hardware investment is being rapidly paired with immediate digital health innovation. The Dr. SV platform is integrating AI-assisted programs.
Specifically designed for what?
To focus on personalized nutrition plans and mental health support, this is a very progressive attempt to use advanced technology to address systemic public health deficits.
However, the medical community itself is maintaining a necessary and sensible level of caution regarding this rapid adoption.
And that caution is vital. Salvadoran doctors view the extensive use of AI in telemedicine with circumspection. They argue that while AI is superb at pattern recognition and suggesting possibilities, it cannot and should not replace clinical judgment.
So it's a tool.
It's a tool, not a replacement for the practitioner. Clinical practice demands the integration of scientific knowledge, accumulated experience, patient context, and crucially, human empathy and contact. Those remain irreplaceable in handling complex diagnoses and tailoring treatment plans.
Finally, on infrastructure, we're observing mixed results from urban renewal projects.
We are. The reconstruction of the Central Market, a major commercial hub, is currently facing significant delays due to protracted insurance issues. And that slows down critical urban revitalization efforts and impacts local commerce.
But conversely, there are successes.
There are. The new San Miguelito market has opened, successfully providing 1,040 stalls for vendors. And the Cuscatlan market is being remodeled with the strategic goal of housing state offices.
Which will consolidate government services in a more central, efficient location.
Right, so these mixed results just showcase the complexity and the occasional roadblocks that are inherent in executing large-scale, simultaneous infrastructure projects.
Now let's turn to the international community. They're paying close attention to El Salvador's trajectory, particularly concerning security and transformation.
And this interest has led to some notable endorsements. The European Union ambassador, Duccio Bandini, stated publicly that El Salvador is undergoing significant transformations.
And this external validation is key for boosting international confidence.
It is. We also note that a deputy from Brazil highlighted El Salvador's security strategy as a model worthy of study, and academic observers from China have similarly praised it.
This international recognition really validates the country's comprehensive security measures.
And the measurable results on the ground support the narrative. The country recently achieved a notable streak of accumulating 13 consecutive days without homicides in November.
But despite the praise for security, relations with the United States remain complicated.
Particularly concerning human rights and migration policy. A federal judge in the United States, James Boasberg, has initiated a formal investigation.
An investigation into what?
Into whether the previous United States administration was in contempt for sending over 200 Venezuelan migrants to El Salvador. This scrutiny highlights the ongoing legal and ethical oversight of migration policies and their intersection with Central America.
And furthermore, United States congressional representatives are actively demanding explanations regarding the transfer of these Venezuelan migrants to the Center for Confinement of Terrorism, or CECOT.
And they're alleging potential complicity in torture within that detention facility.
So this specific legislative pressure from the United States necessitates detailed transparency from the Salvadoran government.
It does, regarding the conditions and treatment of detainees, particularly foreign nationals, if they want to mitigate international tension.
Domestically, the justice system has continued to achieve significant dismantling of criminal enterprises.
Yes, authorities successfully broke up a presumed drug distribution network that was brazenly operating from storefront businesses used as facades in San Salvador.
We also saw major organized crime receiving long sentences.
We did. Convictions of up to 17 years for an 8-person structure that was systematically stealing vehicles across 4 different departments.
And law enforcement also successfully dismantled a transnational cybercrime network.
That's right, they were attempting to hack automated teller machines, ATMs. It demonstrates an increasing capability to counter sophisticated financial crime.
However, there's a significant public safety concern that requires immediate regulatory attention. It relates to traffic fatalities.
The editorial concern was highlighted regarding motorcyclists operating without licenses, and the statistics are alarming,
Nearly 4,000 accidents.
resulting in over 3,700 injuries and a tragic 420 deaths between January and November of 2025.
That scale of injury and fatality suggests a profound regulatory and enforcement gap.
A huge gap regarding this specific, highly dangerous mode of transport.
We must now turn to the persistent social challenges that endure despite the positive economic data.
And sexual harassment remains a widespread systemic issue. Reports indicate that it is most frequently encountered in public transport, the workplace, the street, and disturbingly, within the home environment for both women and men.
This points to a pervasive societal problem that demands comprehensive cultural and institutional reforms.
Not just isolated legal measures.
Right. And the public health system, specifically the Salvadoran Social Security Institute, or ISS, is reportedly facing severe and persistent internal institutional crises.
And these systemic deficits must be addressed as they directly impact the lives of citizens and, frankly, overshadow the positive economic news.
The issues are multifaceted and serious, from what I understand.
They are. First, the ISS is facing significant financial obligations, notably owing compensation to at least 400 dismissed workers' money that's owed to the Protection Fund.
And more critically,
the medical union Symmetris reports that the ISS infrastructure simply cannot cover the high, surging demand for dialysis patients.
and the scarcity issue here is literally life-threatening, correct?
Absolutely. There are critical reports of a scarcity of necessary needles required for hemodialysis patients. For individuals who rely on regular dialysis treatment just to survive, a shortage of even basic consumables like needles is an immediate, life-threatening failure of the public system.
And it goes beyond just dialysis.
It does. A broader survey indicates a general, persistent lack of essential medicines and specialized medical professionals throughout the entire public health system.
And these resource constraints are compounded by pressing public health concerns reflecting potential sanitation or infrastructure deficits.
Yes, we're seeing a high incidence of diarrhea cases, with over 200,000 cases recorded in just 10 months, and 240 new HIV cases registered between January 2024 and July 2025.
So addressing these deep-seated resource and infrastructure issues in healthcare remains a critical and urgent development challenge for the country.
A massive challenge.
That concludes a dense, but I think a profoundly important deep dive. We've covered everything from the mechanics of leverage in global crypto markets to critical supply shortages in national healthcare.
It's a lot to take in.
It is. So let's wrap up with the three most consequential takeaways that you really need to carry forward from this complex set of information.
Okay, here is the concise 60-second summary. First, global financial risk is extremely high and structurally driven. The cryptocurrency market experienced a massive, leverage-driven $1.2 billion loss, amplified by macroeconomic uncertainty linked to United States Federal Reserve interest rates. Compounding this, Jim Cramer's warning of a structural manipulation cabal seeking to sustain Bitcoin above $90,000 introduces serious questions about market integrity and hidden risk for institutional investors who are relying on derivatives.
Second takeaway.
Second, geopolitical policy is being reset by the United States on multiple critical fronts. Washington is pushing a potentially incoming Ukraine peace plan that demands massive territorial and military concessions from Kyiv, often bypassing European allies. Simultaneously, the U.S. is escalating military and covert pressure, including approved CIA operations on the Maduro regime in Venezuela, conspicuously rejecting a multi-year transition offer and demanding an immediate destabilizing exit.
And third.
Third, El Salvador's economic momentum shows distinct strength amidst global turbulence. CEPAL projects robust 10% export growth in 2025, supported by leading regional growth in construction, the strategic acquisition of advanced technology like NVIDIA B300 chips, and historically low energy costs. However, this progress is heavily tempered by systemic social deficits, including the financial crisis and critical supply shortages within the ISS public health system, alongside ongoing intense human rights scrutiny from the United States regarding detention centers.
Thank you for tuning into this comprehensive deep dive. We trust this detailed analysis provides you with the clarity and context necessary to understand the interlocking dynamics of global finance, geopolitics, and regional development.
Your ability to discern the critical information from the sheer volume of daily news is exactly what we aim to support with this level of detail.
Remember, the work we do here is only possible through your commitment and generosity. If you found this deep dive valuable and informative, please consider supporting us with a donation through PayPal or by using our Bitcoin QR code.
Every contribution, share, follow, and comment helps us grow and continue delivering this crucial, in-depth analysis. We encourage you to share this content and help others become well-informed on these vital global and national topics.
Wishing you a productive and well-informed future.
Until the next deep dive.